Good morning, everybody. It's Monday, November 27th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you have questions or comments, please feel free to put those into the comment section, and we'll address those during the session. A couple of housekeeping notes. The War Room is now streaming live on YouTube, as well as X and Facebook Live. So you've got a couple of different platforms that you can now watch the War Room each morning at 8:15 Central Time. Quickly, overnight markets. December corn was down 2 at 461 1/4. January soybeans were up 3/4 at 1331 1/2, and December Chicago wheat was down a penny at 547 3/4. To start this morning, I mean, I know it's probably top of everybody's mind is, were there any pattern changes or what's the situation in South America? So we'll shoot her over to Justin to address that this morning.
Yeah, hi Dan. Yeah, good question. I mean, I think it depends what weather forecaster you watch. If you're on Twitter, you'll hear anything from it's super hot and dry, no really rains forecast to a pattern change coming. So there were some rains that fell. I think a lot of it was kind of anticipated going into the weekend, why we saw that big sell-off in soybeans late in the week. Now the question is they have, kind of a period of, drier, but then rains returning in the extended day. So, it's going to be, obviously see if that happens, right? If we are entering a pattern change or not, like we were talking about before the show, December is when you really start ramping up seasonally, the rainy season. So we've talked about this a lot, right? We've been pretty early on trying to kill the crop, during the month of November. Got us close to contract highs, so now we're backing off as we are seeing some rains come in. So not to be Captain Obvious, but really depends how these actually, how these patterns start to unfold. And I think we took an appropriate amount of risk premium out of the market with the fact that we are seeing some rains. So
seems like everybody's nervous on some sort of a violent pop if this weather thing does materialize into a bigger story. Justin, how do you play that?
Yeah, again, it kind of depends where you're sitting or what your goals are, but we're on a pretty big setback. We're still relatively high price at 13 to 13.50. We kind of broke into all the moving averages overnight. Like we hit the 200-day, the 50-day, kind of bounced off of them. Vols kind of come down a little bit. So I think if you're worried about South America returning to a really dry pattern, some Jan, Feb, March type calls might not be a bad idea here if that's what you're trying to play. I think that's probably a better option than just holding on to a whole bunch of unsold inventory. Again, it kind of goes with the theme we talked about last time, which is, finding out how many dollars you want to put at risk for playing a potential bull market out of South America.
Great. Dustin Johnson, welcome back, buddy. Hope Florida was great. Interesting first notice day coming up. We saw a drawdown in open interest. I know we were talking about that just before we came on. Some thoughts and comments as we head into first notice day?
Yeah, definitely, Dan. So there's huge open interest still for December corn, 243,000 contracts on the last open interest report. And, we talked about this a lot all year, and that is that, when prices get low, you see a lot of holdbacks, pressure for growers to move grain, but, lack of want to sell into these sub $5 prices. So we do think that there were quite a bit of basis only contracts that have been cleaned up here. Just commercials don't allow a lot of growers to take it into this week. We still think that there's obviously quite a bit open though with that open interest at 243,000. So, weakness into Wednesday would be like what history could suggest we may see. Obviously, history doesn't always have to repeat itself. But if we do see that weakness into Wednesday, I think Wednesday and Thursday, that's going to be our time to maybe look at some call buying to re-own some of the hedges that we've made. I think that'd just be a very interesting thing to look for. If you do see a sharp spike down into Wednesday, Thursday, that's something we'll be looking at.
Oh, that's really good. I guess the other piece that we were sort of thrown around, and Justin made this point too, and I think Ben brought it up, but like river concerns and the the thought is that you kind of break in a first notice day and get a pop. I mean, what are the repercussions for not doing that? I mean, is that a possibility? I'll throw it out to Justin for that one.
Yeah, I mean, look, I think there's a reason we're at contract lows, right? So I mean, all these things, that's eventually the market goes to a price, to a level, whether it's spreads, flat price, basis, all the above, to find a home for every bushel. And so, you make contract lows when there's a lot of negative things coming your way, right? So I think low water levels, low demand numbers, so the export market, wide carry, high interest rates, all the things that we've continued to talk about are real fundamentals, and also, why we're on contract lows. So, again, you're kind of bottom picking if you're trying to take a stab at first notice day. You're kind of going off of a market structure type play, which I like a lot, because it's when people are forced to move a position, a lot of times that can make a higher or low. But again, the fundamentals still are not good. Sometimes you bottom on when they're very bad. But again, it could fail. We could have some kind of a rally in first notice day and then go make new lows by the middle of the month. So again, it's just kind of going off of, there's not a lot to talk about fundamentally to really make us rally a bunch here. Now it's just, I think, in my opinion, more market structure, who's satisfied their money needs that they need for the year. And, does the market have to try to bid back up, to try to get some more bushel movement as we get into the first of the year.
That's good. Hey, Ben, I was going to throw it out to you too, out in the East. I mean, we're guys wrapping up or getting towards the end in the home stretch there out that way. What's going on in the East? Ben?
Finishing up, I think in the next few days, most people, I'm on. Can you guys hear me? I know it's breaking up a little bit.
We got you.
I think that, okay, most people are wrapping up in the next 3 to 7 days. There was a little bit of moisture that came across, but cold enough that they can get in there. It's not going to be too sloppy. We should be finished up in the East, I would think, for most people in the next week. Basis levels starting in some places firming just a tad. Processors still really weak. So I was just gonna jump onto what Justin was mentioning there. Also, is having conversations with people, they tend to kind of push you in the corner and look for you to say, where should I lift my hedges? And I think that's the wrong approach when you look at how cheap options are right now in corn. So I think there's a lot of good ways to position yourself if you think there's going to be a bounce here, and especially on unsold bushels, to start putting a plan together for those as well if you have that problem. And typically in corn, in an oversupplied market, it's a really good idea to readjust your expectations on what a rally means. Typically in these bear markets, we see 7 to 10% rallies. And it can be capped by that if nothing changes, and it can last for a long time. So when I, to kind of allude to social media and the tendency to lean towards the rocket ship narrative, I think that you have to really adjust those expectations. And I think that we're chasing fool's gold if you think you're going to see, 550 in old crop corn anytime soon. So
one thing I wanted to bring up too, I saw, last week, obviously we didn't do a war room towards the end of the week. It was with Thanksgiving, but export sales came out. For corn, Mexico and Japan were the largest buyers for the week, but I noticed that accumulated sales for the current marketing year were up 27% versus the same period over last year. And I know the USDA has us at about an increase of 25%. So is that something to take notice of here in the corn market?
Yeah, I'll take that one. I would say that we have had, like to the river problem mentioned below, we've had pretty low rivers. Memphis is still right at the low water market around -5. We're coming off a record low though this year. So, shipments have been fairly slow down the Gulf. China has been absent. So we still have the argument that things have changed a little bit with the size that we're getting out of Brazil. Not only have they had a massive safrinha crop last year to compete with, acres are up again this year for planted or set to be up this year for planted acres for beans. And then safrinha corn again is expected, barring any weather concerns in April and May of 24, should be another force to compete with. So I do think that, even though we have started off, fairly decent, China being absent is a big thing. So I don't think that exports are going to save us. And it goes back down to ethanol. We can only grind so much ethanol in this country. It comes back down to feed. There's a very high probability in our view that we're going to be above a 2.2, 2.3 carryout, regardless. Like exports are not going to bail us out, I guess, is what our position probably would be. To see that July 24, D's 24 spread even continue to widen out to 30 under wouldn't surprise us at all. The best chance I think for a corn rally is going to have to come from a South American weather issue this winter and spring. And also we still have, acres kind of set to face more beans, less corn. Maybe they get more of an even rotation next year. I think that's our best chance is really D's 24 corn finding a story at some point.
Yeah, and I think, the stats kind of support what you were just saying. Ethanol production, decreased last week, and we're seeing implied gasoline demand is, fell 5.2%. So, like to your point, Dustin, I think there's some headways here. Ryland, real quick, starting the week out. I know cattle, it's been tough, man. What do you got for me this week?
Yeah, we saw just absolute collapse on Friday, kind of just a real surprise, I think, to the market based on just the price action alone. Cash markets were down just a little bit, so and beef was actually up on Friday. So it didn't make a whole lot of sense. We know that like at some point you get some insane kind of move that really the market doesn't foresee, but it's just kind of beating up the longs. We're really trying to force the longs out of the market for the most part, and it was just kind of strange. Open interest actually increased, so maybe we're seeing a new round of selling here coming. Wouldn't be surprised to see a little bit of a better open here, or better start to the week, just because we're really starting to build these discounts in the front end of the market versus where the actual cash is trading. So at some point the market will try to figure out what the right basis should be, but we saw open interest increase in the live just by about 1,000 contracts, and same thing in feeders. Hogs they were up as well, so it does look just like there's some real problems, at least in the futures market, or at least the futures are trying to anticipate what's going to happen here. It just, the supply narrative, the supply is being tight, I don't think is really kind of generating the support that we wanted to see, considering feeders are almost, you look at the January contract, we're down almost $50 a hundredweight from the highs to now. So we made a new low for the move across the board. It just kind of feels like the market's really trying to figure out what the right price is going to be here as we get into next year. And, definitely an oversold market, but as we know, sometimes that just doesn't matter. So I wouldn't be surprised to see a bit of a recovery. I think the way to play it, still kind of, if you're just well sold, you're hedged, sit tight. You can maybe look at some out of the money call options if you really want some kind of reownership. The big drawback is that, at least on the live side of the market, cash is still staying up, and that's where everybody's LRPs are going to get settled to rather than the board. So this could, people that really have heavy amount of coverage there, it might be a little bit of a disadvantage. So there may be some options to consider getting the next round of coverage using the board rather than using just the LRPs exclusively. So I think that's something that you're going to get maybe a little bit of panic follow through at some point, but all in all, cash is still around 177 in the south, 280 in the north. Is down about $1 to $2 from the previous week. So hopefully things can start to stabilize now that we got more eyes on the market and everybody's back from the holiday.
Yeah, I'd just like to add to that as well, just a general philosophy here, and Ben touched on it a little bit, but when we talk about reowning with call options, and I think a lot of times it gets misused in the industry, it's okay to just to be hedged and move on. If you had really profitable levels and you sold your crop, it's okay not to have, you don't have to always re-own it. We have to understand too that a lot of the marketplace right now is vastly undersold. So their biggest issue is if prices continue to go lower. So sometimes when we talk about, re-ownership strategies or things like that, it really depends on where you actually sit on the farm level. If you're only 10% sold, you shouldn't be looking at any re-ownership strategies, in my opinion. It's your other 90% is your risk. So I just kind of put that in context. Like when we say certain things, it doesn't mean, hey, you shouldn't be sold on anything, or, you should have unlimited upside. It really depends on the situation. And, we're speaking to a lot of our, individual clients here. So that really depends on if you have been aggressive, got good things sold. A lot of times you just don't want to mess it up. You already have a good profit margin locked in, like move on and look for opportunities in the next crop. So I think that's just a key thing to, when we're talking this way, what we're actually saying.
Yeah, that's a very good point, Justin. And I would also want to point out too, just because we just opened up live here, we are just touching new contract lows for the first time, 460 3/4. So we just took out the contract low. Definitely can look at it and compartmentalize. At some point, you're going to be done trading a crop here, obviously, right? And once we've always had that philosophy that once you know your bushels, it really does kind of come down to speculation. The reason why we re-own during the summer timeframe may be because we don't know what the yield is yet. And if we need to buy back out of those contracts, we have something preset, that allows us out of that contract if we don't grow that bushel. Once you get past that point, though, I think you did bring up a very, very good point for every grower to consider is that some point, it's pure speculation. It's all about what you paid for the inputs versus what you got for the output. That's what we're farming for.
Absolutely.
Very good. As Dustin mentioned, we just opened. We got corn down 2 3/4 at 460 3/4. Jan beans are up a penny, 13.32, and December Chicago wheat's down 4 1/4 at 544.5. Any parting shots here, guys, before we go into today? All right, looks good. As I mentioned in the beginning, War Room's now streaming live on YouTube, X, and Facebook Live every morning at 8:15 Central Time. Be sure to like and subscribe, and we look forward to seeing everybody tomorrow morning. Have a great day.
Thanks.
Thanks, Dan.
Yeah, thanks, Dan.